we are joined by Mr. Suresh, who is the Executive Director and Chairman at Veranda Learning Solutions this afternoon. Thank you so much, sir, for joining in with us this afternoon on ET Now. It's always a pleasure having you on the show. And when I'm looking at the numbers, right, what a jump up that we're seeing in terms of the revenues of the company. Losses also are narrowing down as well versus when you compare to last year. So clearly, operationally also seems like the performance has improved. So, if you could just start by telling and talking to us about in terms of the performance that we've seen in terms of revenue. Do you see this strong growth continuing for the company going forward as well? Where do you see the revenues headed for FY24?
I think last time we spoke, thank you for having me on your show. The last time we spoke, we had done a 200 crores for FY23. We had indicated that we'll grow by 100% going into FY24. Our target for FY24 hence is 400 crores of top line. We had also indicated that FY24 will be our first EBITDA positive year. The first quarter, we had a good quarter with a 5 crore plus EBITDA. This quarter, we have improved our EBITDA by 300% over Q1. We are at about 16 crores of EBITDA for the quarter. And for the first time, we are positive at PBT level. Going forward to the rest of the year, we expect our momentum in terms of profitability to be maintained. We expect to deliver a profit EBITDA of about 65 to 70 crores for FY24. I think on the revenue side, for us, this was a very satisfying quarter. We achieved a revenue run rate of 100 crores per quarter. That set the stage for us to achieve 400 crores for the 4 quarters of FY24. Overall, I think this quarter also continues to demonstrate our ability not just in acquiring businesses, but also to integrate and create additional value over the acquisitions we have done. So the acquisitions we did last year is the result that you are seeing with our EBITDA positive and revenue doubling that you are seeing this year. There were acquisitions that we announced during the last quarter. You should start seeing them strongly influencing our performance further upwards going into FY25.
Okay, so it's an important year, a lot of important events in terms of break-even, etc. as well. But my question is, how important a role will acquisitions play in this? Because you have been very vocal about the acquisitions that you have made in terms of JK Shah, etc. as well. And you have talked about how, it remains an important lever for you in terms of growth. Talk to us about what else is in the pipeline.
I think you will continue to see us acquiring businesses going into the next couple of quarters before FY24 financial year gets over. That will also set in stage a moment of pause, because my belief is by that time we would have completed filling up what we call as the Veranda ecosystem and the grid. From there, you should see a strong growth coming from these acquisitions. And for a moment, we will pause on acquisitions beyond FY24, unless, of course, what I call as a couple of moonshots that we are trying, if they should fructify, because that could move the business to a different orbit altogether. But FY24 going into the second half of the year, we are targeting some acquisitions. Of course, it depends on many factors. And we want to do these acquisitions at market prices that are well above the last preferential issue, which we did at 307. So we really don't want to do a down issue from here. So the next one will be based on the strong performance we have achieved. And the next acquisitions will be largely driven through cash and convertibles.
Convertibles, that's the next acquisition if your plan would be on those terms. But, also I want to just highlight in terms of the operating performance, like I was mentioning as well, right? We have reported an EBITDA this time of 14 crores as well versus an EBITDA loss last year of 17 crores. So, there's a margin around 14% EBITDA margin that is coming in. In terms of, now, where do you see this EBITDA margins? Do you expect them to sustain at this 14% levels? What is the margin guidance for the next few years?
I think by FY24, we expect to see that moving to between 15 to 20%. For us, a sustainable EBITDA margin would be around 25-26% is something that we can sustain. We also expect over the next 3 years our revenues to strongly grow as we have delivered over the last couple of years. And at a margin of about 24-25%, we should be able to deliver an EBITDA which is almost growing at the rate of 100% year on year.
growth phase, how are you going to fund this, entire inorganic acquisitions or the scale up as well? Are you looking at some sort of capital raise, or the internal accruals are enough for you?
Beyond FY24 financial year, a lot of our acquisitions, if we should continue to do some tuck-in acquisitions as a call to enhance the spread of our, including our JK Shah business unit, where we do a lot of tuck-in acquisitions. Beyond FY24 March, a lot of this will be funded through internal accruals and some amount of leverage. Obviously, the view is to keep our leverage down to about 1.6 to 1.75 times of EBITDA. That's the target, to keep our leverage low. But going forward, beyond this financial year, March FY24 ended, acquisitions will be driven through our internal accruals and certain amount of marginal leverage.
Point taken. In fact, on that note, we let you go. Appreciate you making time and speaking with us.